Thank you very much for coming. My name is Rylyn Bailey. I'm the VP Investor Relations for Equinox Gold. Our shares are listed on the Toronto Stock Exchange and the NYSE American under ticker symbol EQX. I will, of course, be making a number of forward-looking statements today, so please do visit our website, SEDAR, and EDGAR to learn more about the company. We started Equinox Gold at the end of 2017, and our mission since the beginning has been to build a big, world-class gold mining company that offers the best possible leverage to gold. The more your annual production, the more gold you've got in the ground, the more you're going to benefit from rising gold prices. So we've been increasing our production year over year, and we're also focused in the Americas because companies that are operating in safe, mining-friendly jurisdictions tend to trade at a premium in the market. We've built this company very quickly. In 7 years, we've grown from a single asset developer to a diversified gold producer with 7 producing mines. We've done it through acquisition. We acquired 1 mine and 2 companies, and we've also built and achieved production at 4 new mines, 2 in Brazil, 1 in California, and of course, most recently, our Greenstone mine in Ontario, Canada. Along the way, we've sold 2 of our smaller mines to optimize our portfolio, and we also spun out a few of our non-core assets to create 3 new companies: Solaris Resources, Versamet Royalties, and i-80 Gold. It's certainly been a busy 7 years, and this is what the company looks like today. We've got 7 producing mines in Ontario, California, Mexico, and Brazil. We've got a very large gold endowment with 38 million ounces of reserves and resources in the ground. We've also got 3 expansion projects that could collectively allow us to achieve our 1 million ounce vision in the next few years. So we've got 721,000 ounces of gold that was produced in 2024. 170,000 ounces of that came from Mexico, about 90,000 ounces from California, around 250,000 ounces from our 4 mines in Brazil, and our new Greenstone mine in Ontario produced 110,000 ounces of gold in its first partial year of production. We started construction at Greenstone in October of 2021, and construction went really, really well. Our team managed to build that project on time and mostly on budget in an inflationary environment, which is an incredible achievement for that team. We poured first gold on schedule in May of last year. We achieved commercial production at the end of October, and we're focused now on ramping Greenstone up to capacity, which will give us 390,000 ounces of gold per year. The other thing we achieved last year was we bought the remaining 40% of Greenstone to consolidate 100% ownership of that mine into our portfolio. We went through construction as a 60% owner, and then we bought the remaining 40% in May, just before we poured first gold. That additional 40% is giving us more than 150,000 ounces of additional annual gold production. It's greatly reduced our costs because Greenstone will be by far our lowest cost producer. And it's also going to give us about $250 million of annual EBITDA at today's gold prices. When ramped up to capacity, Greenstone at 390,000 ounces of gold will be one of Canada's largest gold mines. At 1.23 grams per ton, it's one of the highest open pit gold mines in Canada. And it's also a very long mine life with more than 15 years expected from the open pit. But that's just the beginning. We also see many opportunities to both increase production and extend the mine life by increasing throughput at the mill, by expanding the open pit, and also by developing the underground deposit. We've got nearly 4 million ounces of gold in the underground that's not included in any of the current mine life economics. We've also got lots of exploration upside with both near mine, regional, and belt scale exploration opportunities. So we now own 100% not only of that producing open pit gold mine, but of all this upside at this project. And with Greenstone in production, we're really at a key inflection point in the company's history with increasing production, decreasing costs, and all of that is coming from the top-tier mining jurisdiction of Canada. So you can see from the chart on the right that Greenstone now makes up 50% of our net asset value, which is very important in today's environment when investors are looking for high-quality assets. And from the chart on the left, you can see the significant bump in production that we'll get from Greenstone. All of these are based on analyst consensus estimates. We haven't released our 2025 guidance yet, but you can see that the analysts are expecting a significant jump in production this year and a more modest jump next year with Greenstone operating at capacity for an entire year. You can also see from the gold line that the analysts are modeling decreased costs with a big drop in all-in sustaining costs this year and an additional drop next year. So the average that they've got for 2026 is about $1,350 per ounce. And with gold trading at $2,700, those are pretty exceptional margins and a big increase in cash flow. And our target now is to park that cash flow right onto our corporate revolver. So as we've been growing the company over the last 7 years, we've used debt as one of the funding methods to be able to buy and build these mines. Our job now is to decrease that debt. We took $180 million off the balance sheet in Q4. We'll continue to pay it down in 25 and 26 with a target of being at less than a 1x debt to EBITDA ratio by the end of 2026. So we've got this huge production growth, we've got all this cash flow growth, but we're still trading, as you can see at the bottom of our chart here. So this is a pretty fantastic chart to show to new investors. They get to buy one of the highest reserve bases in the industry, one of the best production growth bases in our portfolio, at one of the most attractive valuations. This is a less exciting chart for existing investors. I'm a shareholder. I feel like we've been trading at the bottom of the pile for what feels like forever, but I'm really hopeful that this is the year that we start to leave that behind. Every quarter that we can demonstrate production growth, increase in cash flow, decrease in our debt, we should start to work our way back up this valuation ladder. So Greenstone alone itself is an expansion project. It did 110,000 ounces next year. We'll get another 280,000 ounces of production from Greenstone when it's ramped up to capacity. We've also got 3 other expansion projects in our portfolio that will collectively bring another 350,000 ounces of annual production over the next few years. We're advancing an underground expansion at our Aurizona mine in Brazil that will increase the mine life, increase production, and we intend to start underground portal development later this year. We're permitting a very large expansion at our Castle Mountain mine in California that's going to give us 220,000 ounces of production from that mine. Again, a very long life, low cost mine in the great jurisdiction of the USA. And we're hoping to do a big expansion at our Los Filos mine in Mexico. Los Filos, unfortunately, is a bit of a question mark in our portfolio right now. For the last 12 months, we've been renegotiating community agreements in order to recast those to make sense in today's current economic environment. If we can't get those agreements done very, very soon, we will have to shut that mine down this year. I hope it doesn't come to that. Nobody wins in that scenario. We want the mine running, the communities want it running, the state wants it running. So hopefully we can get those agreements done, continue operating the mine, build the expansion, and bring significant value from Filos to our investors and to our community partners for many, many years. And of course, every time we deliver one of those expansion projects into production, we see our production grow, our cash flow grows, our costs come down, our risk comes down, and that's the investment thesis to move Equinox Gold from the left-hand side of this chart today, trading at a discount to our peers, to the right-hand side of the chart, trading as a profitable, sustainable, million-ounce-a-year gold company that's valued as a senior producer. The other key thing that sets us apart from our investors, along with the growth, is also the insider ownership. So insiders own nearly 7% of this company. Of course, most of that is Ross Beaty. He's our chairman and our largest individual shareholder. But all of our management team, executives, and directors have personally invested their own money to become shareholders and owners of this company. We think like owners. We're very committed to the success of this company, and our interests are very aligned with our investors. I'm going to end with a few slides about gold. I stole all of these slides from Ross Beaty. He will do a much better job, I'm sure, tomorrow when he's on the panels. But I wanted to hit on a few key things. So we obviously all know that gold had a fantastic year in 2024. It rose 27%. It hit all-time highs. Everybody I talk to thinks 2025 is also going to be a fantastic year. People who are much smarter than I am are anticipating that gold may go as high as $3,000 per ounce by the end of this year. And if you look at the bank estimates, the average for full year 2025 is $27.50 per ounce. Again, those are pretty spectacular margins when you think that Greenstone is going to come in at around $1,000 per ounce. So if gold does well in 2025, Equinox Gold should do very, very well. Even if gold goes down or stays flat, we should do very well because we're offering all of the catalysts that investors are looking for. Leverage to higher gold prices, increasing revenue, increasing cash flow, decreasing costs, a focus on paying down debt, and an extraordinary growth profile. So if you've got a moment, I encourage you to scan the QR code in the top right-hand slide, part of this slide. It'll take you to a really cool app that shows you lots of key takeaways about Equinox Gold. But why would you invest in Equinox Gold? We offer exceptional leverage to rising gold prices, significant production growth this year from Greenstone, more to come in the next few years from the other projects, increasing cash flow, a key inflection point in the company with the cash flow, the costs coming down, paying down our debt, and Greenstone owning 100% of that has really solidified Equinox Gold as a major America's gold producer. And you get all of that at a very attractive valuation. So I encourage you to watch Ross on the panel. I think he's on 2 panels tomorrow. And please do pop by booth 314 and we can have a longer conversation about the company. Enjoy the conference.